Hi, everybody. Good afternoon. This is Krista with Remax, and I hope you're doing well today. It is Wednesday afternoon. There's not a cloud in the sky, so hope you're doing well and safe at home. I do have a special guest with me today. His name's Paul Olbrantz. He's with Clear2Close Brokers, and he is my lender of choice. Welcome, Paul.
Hey, Krista, how are you?
Great. Thank you. Thank you. Thank you for joining us today.
My pleasure.
The reason that I wanted to set up this webinar is because, as you know, the lending world is changing minute by minute, it seems. So I wanted to share with our viewers the recent change out there, and specifically forbearance and exactly what that means and what it doesn't mean. So I was hoping that you can shed some light on exactly what is forbearance.
Oh, that's great, Chris. I'm really glad you're putting this together because this is definitely a hot topic. And more importantly, there's a lot of misunderstanding on what a forbearance is and what it's not. So let's start with what a forbearance is not. A forbearance is not free money. It's not debt forgiveness. It's not a lender saying, hey, you don't have to make your mortgage for 3 months and then we'll just go back to normal. What a forbearance is when an individual requests from a servicer. Now, what a servicer is, real quick, is that's just simply the person you make your mortgage payment to. So every month you get a statement with a name, Mr. Cooper's or whatnot. So they're going to be your servicer. And a forbearance, what they're going to do is they're going to allow you to modify your payment, whether it be making no payments or a lower payment for a specific period of time where you won't accrue any penalties and you won't be reported delinquent on your credit report. But make no mistake, the interest that accrues during that period, Krista, the client's going to be responsible for.
That's good to know. That's good to know. Can you tell us, are all loans applicable to this forbearance, or does it need to be a certain kind of loan?
So that's a great question. So under the CARES Act that just came out, where it's just lenders are required to issue forbearance based on a hardship from the coronavirus, those loans are being, if you have if you have a USDA loan, FHA, VA, or if your loan is owned by Fannie or Freddie Mac. Now, if your loan is not fit into that list of loan products I just described, it doesn't mean you don't have forbearance options. What it means is simply that it's not covered under the CARES Act. So in each of those scenarios, you want to reach out to your servicer to see what your options are.
That was my next question. If you're not sure if your loan applies to this, should I just wait for my servicer to reach out to me and say, hey, you apply for this, stop making your payments? Or should I be more proactive and reach out? What is your recommendation?
Oh, this is great. So if you're watching this video and you're thinking of doing a forbearance, this is the one thing I want you to take away. Maybe there's two, but this is one very important. It does not automatically occur. You actually have to call your servicer and apply for it. So, and not only apply, they have to approve it. So once they approve it, that's when you can stop making your mortgage payments without any penalties and being reported to the credit bureau. A lot of the common questions that are coming up from that point. So let's say, hey, my servicer approves it. Well, then what's next? How do I pay that back, right, Krista? That's huge. And so, each lender is going to be very different. Each servicer is going to have their own set of rules on how this works. And it's going to range from, some lenders are automatically moving it to the back of the loan. There's things about that as well. Okay. And then some servicers are saying, hey, after 3 months, you have to pay it all back at that point. So whatever mortgage payments you've missed, it's going to come due in that 3-month period.
So there's no one plan fits all. It all has to do with your servicer and what plan they have in place. Am I hearing that correctly?
That's 100% correct. Okay. Absolutely.
Okay.
But make no mistake, though, I think a lot of people are thinking other servicers are giving money away for free. That's just not the case.
Okay, so that money does have to be paid back. It's not forgiveness.
Right.
It's forbearance. Okay. That's good.
And another thing that we should touch up a little bit upon is, let's talk about the modification piece, right? Okay. So you apply for modify, you get approved. Here's some things people aren't talking about, or maybe they are, but let's just make sure we address them. is if you do have your loan modified, we don't know how that's going to affect your credit score, right? So modification is an event on your report. So it's not necessarily reporting delinquent payments, but get this, certain lenders have come out and have already stated that if you've applied for a forbearance or are in a forbearance, you can't do a refinance with them. Now, they haven't given us a timeline saying, oh, you have to wait a year, you have to wait 6 months. I don't know that yet. But those are things that people aren't talking about and they don't understand. They just think, hey, we're just going to get this forbearance and then we'll just refinance in 2 months. So those are things to consider.
Okay, that's good to know. You know, I'm just thinking maybe some clients might be thinking, you know, I can make my payments for maybe the next 2 months, and then I'd like to apply for forbearance. Maybe I should just apply now and put that savings into a bank,
right,
for a rainy day. What would you recommend your clients to do in that situation?
Great. So this is what I've been talking to all my clients about. So we have a range, right? We have some clients that kind of like the example you mentioned, Krista, who want to put the money in a savings bank and a savings account. They have the money to make their mortgage payment, but they want to use this kind of as a savings tool. And then we have the other clients who both wage earners have lost their jobs, and it's a decision whether to make your mortgage payment or feed your family. Now, in that scenario, the answer is very clear. The answer is forbearance is there for you. It's exactly what it's meant to do. But on the, everyone in between, we got to start asking ourselves different questions. For example, I think it's very important before I go into those, questions is that if you don't apply today, it doesn't mean you can't apply tomorrow. So as a lending industry as a whole, what we're encouraging people to do is to continue to make your mortgage payments until you can. First of all, we want to protect your credit because we just went over that a little bit.
Right.
But secondly, the forbearance issue, Krista, is a huge issue that can greatly impact lending as a whole. It's kind of like voting. Everyone doesn't think their own individual vote counts. But if everyone had that attitude, it definitely makes a difference. Does that make sense?
It definitely does. Absolutely.
So I want to encourage you, if you have the means to make your mortgage payment safely, meaning you can provide food for your family, then I would encourage you to do so. And if 3 months, 4 months down the road, if you can't make it, let's apply for forbearance.
So what I'm hearing from you then, there's no deadline to apply.
Correct.
Okay, great. What about scams, forbearance scams?
Oh yeah.
I don't know if you can comment on that.
Yeah.
What if a client wants to apply and someone calls them and
Right.
asks them for personal information? Should they apply over the phone? What is your recommendation?
Right. So number one, if someone's calling you, it's more than likely a scam. One of the biggest complaints I have my clients are giving me right now with their servicers is it's taking 24, 48, 36 hours, whatever that may be, to get back to them. A little perspective for you, UWM, who's one of our wholesale lenders we use, they have their own servicing department. Let's just say on an average, they would field 1,000 calls a day. So they had that staff for that. Literally overnight, Krista, they went to 20, 30,000 calls in a day with that same staff. So you can imagine they're completely overwhelmed. Now they're committed to getting to you and helping you with the forbearance, but they're not going to be making outbound calls. I guarantee you that. So if you receive an outbound call, just simply say thank you, hang up. If you want a forbearance, call your servicer directly and work with them directly.
And where do I find out that information, Paul?
On your mortgage statement.
On mortgage statement. Perfect.
Absolutely.
Okay. They've got the customer service on there.
They do.
Okay.
And then what's going to happen too, Krista, once they approve it, they're going to send you out a packet for you to sign. And it's going to have all those terms for your forbearance there. Now, with my clients, they're always more than welcome to reach out to me. I'll go over it with them and talk about the pros, the cons, what they should be looking out for. And obviously anybody out there, your friends, family, your clients that have that same questions, I'd be happy to answer it. Now, I can't do the forbearance for them. I can simply talk to them what they're approved for.
That's fantastic, Paul. It's always nice to have an extra resource, especially at this time. Before we wrap up our interview, is there anything that I haven't touched upon about forbearance, or if there's any closing thoughts or comments that you have at this time for our clients out there?
The only thing I want to just say again is if you can make your mortgage payment, please do. this forbearance thing, it could have huge unforeseen consequences in the mortgage industry. Let me give you an example. Is that all right, Krista, if I give you a quick example?
Absolutely, please.
This is overly simplifying it. And please, if you're a lender out there listening and like, what I mean, this doesn't quite totally make sense. It's meant to just to give people an idea of what it looks like, right? So each lender, when they sell their loan to Fannie and Freddie Mac, every month they have to fund their own loans. Then they sell it to Fannie and Freddie Mac, and that's how they get reimbursed. So they have what's called basically a credit line of credit, right?
Right.
So each month they fill that line of credit up. Fannie Mae comes, Freddie Mac comes, they buy it, and all of a sudden they have all that available credit. The problem is when people apply for forbearance, Fannie and Freddie Mac will not buy those loans right now. And so they're limited in their ability to actually lend out new money. And so on a compounding effect, if lenders can't lend money, it just kind of builds and builds to a point where I don't know what can happen.
Right.
And so if you can make it, please do. If you have any questions, please give me a call. We'd love to talk to you about it.
Well, Paul, I can't thank you enough. This webinar has been so insightful and educational for everyone out there, me as well. Guys, if you have any questions for Paul, please reach out to him. Clear2Close Brokers, 707-494-7017. If you have any real estate questions for me, call me anytime, 707-338-1622. And Paul, thanks again. I really appreciate your time today.
Absolutely. Have a wonderful day.
Okay. Bye-bye.